was my year, yeah.
Everybody, welcome to the morning show. Am I on? Yeah, just making sure. Spencer Israel here. I've got JC Parets and Steve Strazza. Let's see. What are we talking about today? Altcoins? Something about altcoins. Something about that. I'm not quite sure. It's Crypto Friday, so we're going to talk something about crypto. I can tell you that. We'll talk Hot Corner. We got a couple movers to discuss. I want to talk about the new GameStop movie. I don't know if we'll have time for that because I do have to head out a little early, so apologies there. Guest today, Todd Gordon. You know him from CNBC. He's been a contributor there for a long time. Technical analysis master. He'll be on the show at 9 o'clock. Kimmy Sokoloff, as always, at 9:15. Ian Culley had a Fick and All-Star charts on at around 9:30 or so. And that's the rundown. That's how we're doing. What's up, everyone in the chat? Ken K, Wavy McFly, Yosul1. How's everyone doing this morning? I'm fired up because it's Friday and I get to leave early. But you don't want to hear about that. Let's start the show. Bring on JC and Strazza.
All right. Good morning, folks. Nice day in the city yesterday. New York City's not dead, by the way. I don't know if you heard. New York City not dead.
Do people still say that?
Dude, the Lower East Side was popping off last night. Popping off.
I thought we had agreed like 2 years ago that New York was not dead. I don't know.
Good. Lower East Side popping off like I've never seen it. The kids these days, they're all out, gathering amongst themselves.
That was
they're all out. Did I have sushi? I had sushi. I'm not going to talk about the name of the place, though. I don't want people to find out. It's just a little place in in Soho. No big deal.
So it was so good you don't want to talk about it?
That's right. Yeah, we're keeping it amongst ourselves. If you behave yourself, I'll let you know. I'll give you the address.
Yeah, sure. Happy Crypto Friday, everyone.
Are we going to play it?
Thank you.
Are we going to play the bumper?
Yeah, we're playing the bumper. I didn't realize that was my cue.
That's the goddamn button.
All right.
Ooh, I like it. I like how Meltem made an appearance there on the Crypto Fridays bumper. I was with Meltem last night. We had a few beverages. Oh yeah, we had some steaks. You know, had some steak frites. Steak frites, as the French call it. Yeah, Meltem's doing great. She's doing fabulous, you know. All right. So shall we get right into it?
You celebrated your Crypto Friday this week by having some secret crypto meetings in New York City.
They weren't that secretive, but sure. In fact, me and Meltem, I mean, when her and I get together, we just start arguing about things. Even if it's nothing to argue about. I was like, oh yeah, Bitcoin's still under 30. She's like, no, it's not. It's at 30,040. I was like, here we go. I'm like, roughly. So we were arguing about the price of Bitcoin yesterday, which sort of goes to show you that maybe the sort of environment we're in, or perhaps the type of environment that I was surrounded by yesterday, which maybe were some more crypto oriented people down on the Lower East Side, where all the kids are hanging out these days, apparently. So why don't we kind of take a step back, take a look at that Bitcoin Ethereum chart. To me, this really tells a bigger story, bigger picture. We've been in the camp that if we're above those late 2017, early 2018 highs, you got to be long, right? You got to be long above that. So not only do you got to be long because there's opportunity to the upside, but the risk of not being in and not having exposure in these areas if we're above the prior cycle's highs, in my opinion, was too great to ignore, right? So great, long position. But now short term, if you want to show funds, the Bitcoin around 30, to me, above 30 is where things really start to get interesting. We talked about it yesterday. We talk about Crypto Friday. It's been a crypto week, right? We've been talking about this every day because things have been moving, right? Movers and shakers. So if we start holding above 30,000, I think that's the big one. And then Strazza, this is a great chart by you. Looks like somebody fixed it and changed the price of Bitcoin to orange instead of yellow. Kudos to whoever did that. Whoever used the yellow one originally, shame on you. But the orange makes a lot of sense here, and it's what we've been talking about for quite some time, for a couple months, really, is the correlation between Bitcoin and the Nasdaq 100 and tech stocks has been very high, and more recently, Bitcoin just has had a hard time keeping up. Most things have had a hard time keeping up with the Nasdaq 100, to be fair, but nevertheless, the correlations haven't been there. But Strazza, these correlations revert to positive every time. So is this time different?
You say I always interrupt your beautiful speech every morning, but then you call me in and ask me to participate in it. So I don't know what you want these days. I'm with you. I think this was the best evidence that we had for what we saw from Bitcoin this week. This was really the best evidence.
This is your chart. I don't want
Hold on.
steal your thunder, but that's the right thing to do. Is kind of pass the baton over. It's a good chart. Or are we going to pass the credit on to the Fonz? Who came up with this chart?
I got to come clean. This is not mine. This is Fonz's, and he's probably dying behind the set right now because I already gave him a hard time about the yellow from yesterday. And we hadn't
Fonz, what the hell was that, bro? You're better than that, Fonz. You're better than that.
It's a great chart, though, right?
It is.
And we've seen this correlation, kind of break down or dislocate for a couple months at a time before. And whether it was Bitcoin catching back up to the NASDAQ like in 2021, or whether it was NASDAQ catching back down to Bitcoin late last year, right before they both made a tradable low and exploded higher, bless you. It doesn't matter, but it always kind of reasserts itself, that positive correlation. And it's happening again. And why wouldn't it happen in a style where Bitcoin catches up to technology, just like everything else is catching up to technology and the leaders these days, right?
So I'm walking down the street with Meltem, and we're talking about Bitcoin. I guess that's what me and Meltem do when we get together. And I'm like, you think I own enough Bitcoin? I feel like I don't own enough. And she's like, GC, why are you buying Bitcoin? I was like, 30,000, support, resistance. I start going into my whole thing. And she's like, oh, yes, men, charts are astrology for men. Yes, I know, JC, with your lines and your rectangles. And she's like, literally just busting me. And I'm like, what's wrong with owning more Bitcoin? She's like, JC, do you want to be rich? You got to find the 150 bagger shit coin. I'm like, do I? So she starts rattling off some names. I've never heard of any of these things. We should probably have her on the show to go discuss these things. These are very fancy shit coins that I was not familiar with.
Like, so how small was she talking?
Can you just name a couple just so?
I can't actually. I don't remember. She was talking very fast.
Can you just symbol drop? Can you just symbol drop a few for us?
What?
Just symbol drop some for us?
I swear I don't remember these names. I had never heard of them. And she was talking very fast. And we were drinking, and it just, I don't remember. All right. We'll get, I have her phone number. We can just call her. But the point is, it got me sort of thinking, because you and I, Strazza, we debate, we think about this constantly. We don't really debate with one another. We're sort of like question it together, I think, of whether the play, if we're going to have, a next leg for cryptocurrencies in general, and Bitcoin's getting going, shouldn't the altcoins do exponentially greater, right? These higher beta, lower market cap cryptocurrencies just dramatically outperform Bitcoin. Theoretically, yes. And that's sort of where her head is at. And mine hasn't been, for the simple reason that I like to own the things that are working, and Bitcoin's working and those others are not. If you want to show the altcoin index, this is an equally weighted index of a series of altcoins.
Yeah. We're not seeing it, right?
No.
Like we were talking about yesterday, and it's definitely a question that we're kicking around these days a lot. It's like, what is that strategy going to be? I think it would make sense for the market to be maybe a little bit more selective, but if that's not the case, I'm not surprised either. Like, kind of the point that you made yesterday. We make the same mistakes over and over and over again. So
why don't you go show some of these, look at Polkadot, right? So here's the equally weighted altcoin index. Now you're looking at Polkadot. Like, yeah, maybe double bottom, then look at Solana, like are these, like when you go chart by chart, stocks or crypto or otherwise, like, are you going to be like, oh, this is this Ethereum classic, this is the one I want to buy, or the Shibu Inu, this is the one I want to buy? Like, is it though? Is it?
When you're done showing these, then just go back and show Bitcoin,
right.
and like, let's just remember how different these charts look. They look very different. A lot of those look like continuation patterns, and they're ready to go lower, like the Shiba Inu you just had up. Bitcoin's a nice reversal, and I think we're getting that confirmation like right now, above 30,000. So it's just.
Are we? Is this it? I don't know. I'm not sure this is it. Maybe this weekend. Listen, this is our first attempt back here since April, which is the first attempt back there since the summer of 22. So I think we got some time. Go to the equally weighted chart. This is great. This is an equally weighted chart of Hut 8 mining, Marathon, and Riot blockchain, or whatever Riot calls themselves these days. Equally weighted. I mean, now we're talking. Now we're talking. So for me, and this was the argument that I was making to her, was like, I'm getting my juice if I'm getting my juice in the equities, right? In the options in the equities. So it's like a derivative of a derivative of Bitcoin. I mean, I think that's junky enough, and, she glanced her eyes at me, judging me, and I felt a little bit like I was doing something wrong. I'm not going to lie. I felt like I was doing something wrong. Look at the Riot on an absolute basis. Look at Marathon on an absolute basis. That's really where my head is at. These are the areas that we're looking for. If these altcoins start to make their moves, then perhaps we'll add them to the bunch. Maybe we'll shift all of our assets into those. I honestly have no problem with any of that. I got to see it though. And I got one chart, not of crypto today on Crypto Fridays, but related. We're looking at regional banks and community banks really completing this top. Those quote unquote crypto banks, Silvergate, Signature Bank, First Republic, are the more crypto oriented banks that clearly regulators didn't want around no more. And, you're sort of seeing the implications of that. Like, is this over, Strazza? Was this a counter trend bounce? Was this a dead cat bounce in these little banks? And now we're going to roll over and make new lows, and the trend lower continues.
I think bulls have to hope not. Certainly looks that way this week. What's incredible is, yet again, as banks are coming under pressure, really this has been going on for most of June, right? Since the second week of June, banks have been kind of selling off. At tech, growth, Bitcoin, now everything else just continues to work. Home builders, in the face of that weakness from the banks. I just don't know if that can last forever.
I don't think it can. I mean, listen, if these regional banks roll over, start making new lows, go retest those 2020 lows, the XLF goes down with it. How strong are equities in that environment? Flat to down, in my opinion, probably down for the most part, but we'll have to see it. It'll be an interesting Friday today. But that's sort of the state of the markets. Good conversations yesterday in New York. A lot of smart people trying to get together. People are doing things, man. People are making deals. New York City's popping off. Lower East Side. Shout out to the Lower East Side.
Stock Market Mike says BlackRock will put a floor in Bitcoin. I think it'll definitely put a bid in Bitcoin, but the floor in Bitcoin happened late last year. We're a long way away from there.
But while I agree with that, I mean, I don't disagree with that. I don't know how much I agree. I'm not an expert, but I don't necessarily disagree. How does that impact the alts?
Doesn't. Not at all.
Right? Not at all. Yeah.
Well, it doesn't, like, on paper, but then there's the whole relationship thing, right? Where they all trade together. Most of them.
Well, but there's no direct relationship, right?
Right. Yes.
There's no mechanism buying shit coins. There aren't a bunch of funds that buy shit coins when Bitcoin.
Well, not yet.
Not anymore.
You get what you're saying. There was a positive correlation there in the past. And the question that JC and I keep asking is, will it be there in the future? We'll see. But it's not there today. Bitcoin looks good. Ethereum looks okay. And then as soon as you start moving down the market cap scale, it just gets uglier and uglier. There's not much else to do than buy the big guys in the space right now. Is it almost just an extension of the theme that we've seen play out in equity markets all year long?
There's only 5 coins going up. It's 5 coins to bring up the whole market.
2 coins going up in crypto, guys.
It's really just one, I think.
Ethereum.
Well, if you want to talk about weak market breadth in cryptocurrencies, like you can make that argument. It's only Bitcoin. Bitcoin may be acting like as a safe haven within the crypto space. That might be true, which I'm okay with. I don't really give a damn about any of those other coins that I don't own. Well, I don't care. Let them go to zero.
So I remember 3-4 years ago, you and I talking on Clubhouse or Spaces and saying 97% of these things are probably going to go to zero and go away, right? There's more cryptocurrencies and stocks. It's just crazy, right? And the majority of them we don't need. It's nuts. Of course, there's going to be weak breath at one point to get to that place that we knew that we were going, right? So when does that happen? And we really weed out all these shit coins. Maybe that's now. I don't know, but Bitcoin's the way to go.
All right, let's go to some traditional assets there, Spencer. What do you say? Maybe a little what's moving, maybe a little earnings. Anything exciting happening this morning?
Wait, hold on, JC. Before we leave crypto, could we throw this up? Chart 10. Have you heard of this one? Valkyrie Bitcoin miner ETF, WGMI.
What's in this thing?
Bitcoin miners.
How little is this thing? It's got less than $10 million in assets, bro. It's just nothing. What am I supposed to do with this?
Clean Spark, Riot, Marathon, Bit Digital, Hive, Bit Farms, Hut.
You know what this is good for? This is another classic example of, going into the ETF, seeing what's in it, finding ideas within the basket, and then executing on the equity itself. That's what this is good for. Kind of keep track of some of these names. Some of them you might not even have heard of. Like, I don't know this TerraWulf, WULF, right? Like, that's a good example of one that I've never heard of. It's tiny. It's $350 million. Yeah, this is tiny. Trades, though.
Look at
TerraWulf, huh?
Look at the CLSK.
Yeah, it looks like the other ones.
Yeah.
No, it's a good ETF. Not to trade the ETF, not to buy the ETF, but to look at the components. All right, I'll give you that one. Can't touch the ETF, but the basket is interesting.
Just found out about it yesterday. I didn't even know we had it.
Investors can kind of make their own basket, right? Pick the ones you like the most, get 3 or 4 of those if you want to do that, or pick your favorite one. That's what I did, right?
No, Bit Farms is another one I hadn't looked at in a while. Yeah, look at that. BITF.
Yeah.
It might look better than any of them.
Yeah, it does. Interesting. Yeah, but they're all going to move together, no?
Listen, I wish Riot moved a little bit better earlier this week when the other ones were really ripping. You always, that's always a risk that you pick the wrong one for a extra short-term trade like that.
Yeah, that's a good point. But they also have the risk that you own too many and you're not leveraged into the one that's working the best. So like, there's no right or wrong answer. It's really just do what's best for you, right?
All right, we can move on from crypto now.
All right, Spencer, see what's moving. We're bringing in Todd Gordon today. Shout out Todd Gordon coming in. Todd Gordon, hell of a skier.
Okay, just one here this morning from an earnings perspective. CarMax. I guess the used car market is healthy and robust because CarMax had a good quarter last quarter. Their EPS came and their sales came in above estimates, and they gave very strong guidance for the quarter we're in right now. So good quarter for CarMax, and I guess that means, unlike the housing market in this country, the car market is moving.
It's a good chart, and you're getting that breakout today. See it all the time. Earnings will act as the catalyst to break these bases out, and happening all quarter. This is just the latest example. What do you say, JC? 80, 81?
Yeah, that looks about right. Above that, you can own this thing all day. How high do we go? I mean, you could be looking at 105, 110. Why not?
Yeah, I agree.
This thing's a $12 billion. It's a $12 billion market cap. Dealerships. Interesting. These sorts of names keep popping up. Dealerships, right?
That big of a beat, huh, Spencer?
$1.16 on the earnings per share versus an estimate of 79 cents. So that's a very big beat. Sales beat 7.69 versus 7.53 billion, and they gave good guidance.
I got different numbers over here.
You probably have. I have the adjusted numbers. You probably have the gap numbers. So adjustments from adjustments. But,
Fancy. All right.
yeah.
Dude,
All right, yeah,
accounting
it's a big
sucks.
beat then. Regardless, both beats.
Yeah.
You want to look at the adjusted usually. That's up for debate, I guess. But
Well,
All right, fine.
I mean,
somebody tell me what the hell's the difference between the adjusted and the non-adjusted. All right, I'm going to pretend to care for 2 seconds. Make it quick.
Spencer, you want to go or you want me to take it?
GAAP stands for generally accepted accounting principles. You report your GAAP numbers, and they're all the accounting to get those numbers is the same formula, right? But of course, every industry is different, so you can make adjustments depending on your industry, depending on your business, whatever, and that is theoretically, at least, a truer number, truer in quotes, for your business because it's adjusted to fit the needs of your business and your industry. But
Yeah,
that's
good. So, yeah,
Yep.
That was actually really good. That was great.
Oh, thank you.
No, that's basically it. They can break the accounting rules, but it will still be an audited number if they can make a good argument for why they should adjust for certain things and say this is a truer representation of how we did this quarter. That's what it is when you hear the
That
difference.
was so boring. That was quick.
Yeah, there you go.
All
Look at
right.
it.
Are you guys still talking?
His eyes are glazing over. Let's do a couple movers here quickly. Strazza, you dropped this in Slack earlier. I also saw that article as well in the journal about 3M. This is always interesting to me when stock reactions to legal
Nikki, yes, adjusted is non-GAAP.
stock reactions to legal news. So like 3M, if you're coming in this morning and just looking at the stock this morning, it's up, right? Because they settled a $10.3 billion lawsuit.
Yep.
But of course, if you've been following the story, 3M has like hundreds of lawsuits that they are facing right now, really going back to like 50 years ago, right? For some of the shit they have done to the environment in their products, right? So they settled one lawsuit this morning, and now they have many others to settle. So there was an article in the journal just about how they may have to cut their dividend to account for all these settlements that they're going to have to do in the coming years.
Throw slide one.
Hold on. Keep going, Spencer. This is good, and you're going to like this, JC. I'll bring you into this conversation.
So throw the slide up. Throw the slide.
Okay. So there's basically let me give you some numbers here if I could find them. Oh, my bad. Did I say hundreds of lawsuits? I meant thousands of lawsuits.
It was 10 billion.
Are they that bad, these guys? Jesus.
Yeah, it's like pollution. You can't pollute.
Well, yes.
But you know what the most interesting thing about that article was, Spencer? Did you read? And this is what happens when these companies mess up like this. We saw it with GE. They're going to be spinning off their best performing unit, their healthcare business, in 2024. That's a spinoff you want to buy.
General Electric is doing that.
Spinoffs are interesting, right? Sometimes you don't want to buy them.
They're all doing that.
Like Johnson & Johnson.
Oh, yeah, I don't know much about that one. All right, so get this. $10 billion in this pollution settlement fine. Like Spencer said, there's probably more coming. First interesting thing is paying fines and settling fines, even for billions of dollars, tends to be a good thing, right? Look at the stock today.
Yeah.
That it's a good thing. It's just that there's finally certainty around the situation, or increased certainty or less uncertainty, right? They probably still have unsettled lawsuits that the market's still going to have to discount for, but there's more certainty now that this big one's out of the way. JC, what if I told you? So the whole Wall Street Journal article that Spencer and I are talking about talks about how their dividend's probably not safe anymore. What if I told you that, because they've been paying it for 60 years. So this is an aristocrat of
6% yield.
So what's the market telling you?
The market's saying it's bullshit. They're not paying it, right?
What if I said to you that these guys might just go to the debt market, borrow $10 billion, pay off their pollution settlement, fine, whatever, and keep paying their dividend, and even raise it?
Is that
Because
what
if
they're
they
going to do?
don't raise it, they get removed from certain lists. They get removed from certain funds.
Yeah, that has real consequences.
Certain investors might no longer fit their mandate or their criteria. Their stock gets sold. Is that something a company might do? They could go borrow money
They
easily.
need to do something while we're in the middle of bull market. Stocks keep going up every day, and this thing keeps making new multi-year lows. This thing's down at levels not seen since 2012. It's making decade lows. Decade lows in this market environment.
Yeah.
You know, it's one of those things where, like, if the stock you own hasn't been going up, you own the wrong stock. You know, like, right?
Well, it's
Like,
also
have we not been in one of those environments, like, where, like, if you're not making money in this environment, maybe reevaluate things. And isn't this a prime example? Like, if you have a lot of exposure to 3M, like, you know, right?
Isn't another thing that we see, you know, stocks that pay 2 to 3 times the average market yield tend to have charts that look like that. I could show you a lot of others.
Right, because the price that continues to go down that moves the yield up.
It's just math. Yeah.
It's just math. It's just math.
No, but listen, I guess my point is there are things that these just mega cap, you know, monster companies can do. These guys probably won't have to cut their dividend. It would probably be the honest thing to do. It's not a good move to take on debt just to keep it, but it wouldn't be the first company to ever do it. Sure.
What's another 10 billion? What's the difference?
I mean, their debt has kind of exploded already, but yeah, not looking good. Do they get removed from the Dow? And who do we put in? If we're kicking out 3M, who are we putting in? Well,
bring back Honeywell.
It's got to be a tech company.
No, bring back Honeywell.
Dude, they need to increase their tech exposure.
It's got to be.
Honeywell. Bring back Honeywell. Why'd they kick it out in the first place?
Salesforce is in it, right?
Yeah.
Okay.
They kicked out ExxonMobil and put in Salesforce right as tech was peaking and oil was bottoming.
Okay. Do they put Exxon back in?
They should have Exxon and Honeywell back in. I don't know why they took them out. These idiots. All right. Is Todd here, or we got another one?
Yeah, Todd's here. We'll bring him on in a minute. I also wanted to mention Starbucks. This will be in the news today. Just the labor strife. A bunch of the stores are threatening to strike starting next week. The stock, I was actually surprised to see the stock down. You don't often see stocks react to labor news. It is down this morning in the pre-market session, and we haven't talked about Starbucks in a while, so I figured I would just bring it up there just to get your thoughts on the chart.
I like Krispy Kreme.
That got a pop because Ron Barron was on CNBC this morning pitching the stock.
Is that really why it moved? I heard him.
That is really why it moved.
Yeah. Pay that.
Throw up the chart. Throw up the chart there. Slide 5 there on the deck. I mean, it's messy. I mean, I'm not really seeing anything. Are you guys seeing anything there on the Starbucks?
I remember I bought this thing as like a subscription play.
I see a top.
But no.
What subscription? What do they?
Panera announced they like a membership program for like Panera to whatever get discounted coffee, and I was like, oh, that's so smart. Starbucks is going to do the same thing, and then that was like 3 years ago, and then never.
That was your reasoning for buying the stock, Spencer? This is definitely before you were hanging out with us so much.
Yeah, it's like 4 years ago.
That was a dumb idea.
Oh wait, you think that's dumb? Oh man. I bought a stock yesterday. We'll talk about it next week or something. I bought a stock yesterday for maybe the dumbest reason ever.
Spencer, what's your stop on Disney? 0?
Yeah, you bought Disney,
dude. No, dude. My cost basis is so. I've averaged down so many times in Disney that like I don't even know where my cost basis is at this point. All right,
that sounds like a terrible strategy.
I'm never gonna. I bought it to never sell it. I don't even look at it. I have no idea.
This is terrible, Spencer.
Strategy.
This is a terrible strategy.
It's not as if I'm like I sleep well fine at night. You know, Disney's like.
Wow. It's not about sleeping well. It's about making money. Damn it, Spencer! Stop making stupid decisions.
Disney's like 3% of my falling of my portfolio.
We gotta work on Spencer.
Yeah, we gotta send Spencer to boot camp.
We should do a segment.
Yeah. We're just gonna stick you in a cave with Sean. He's just gonna like drill pieces of education into your head.
Wait till you hear what we'll talk about a trade I made yesterday. We'll talk about it next week. My reasoning is flawless. My logic is sound. All right.
Spencer walks us through a trade. That's a new segment.
Let's bring on today's featured guest, Todd Gordon. You undoubtedly have seen him on CNBC over the years. He's a contributor there. He's also a founder of New Age Wealth Advisors, and he's here right now. Let's get him on the show.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Todd, what's up, my man?
Wow, what an intro.
Not
you
bad,
guys are not
huh?
messing around here.
No, we have a good time. We've got a nice team. We're having some fun. We're bringing in great guests, yourself included, ladies and gentlemen. Mr. Todd Gordon. Who's a better skier, Todd or Brian Shannon?
Oh, I should have brought along that footage of you and I racing in Breckenridge, man. That was fun.
You were racing. I was just trying to stay alive.
Dude, I'll tell you what. I think you'd be happy to hear this, man. Our life has become all about baseball. Holy cow, my twins just went head over heels into baseball.
I love it.
I know you got that ahead of you. How are the twins?
Dude, they're good, man. You know, they're getting bigger. They look at me like they know who I am. Like, it's crazy. It's absolutely insane.
How many dumb questions do you get about twins walking through the mall?
Dude, we were walking. I had the boys, and we walked into like a pack of like 12 or 13 hungover girls at the beach, and they all turned around and started like just swarming me in the stroller. They were not interested in me at all, obviously. But the boys were getting all the attention. I mean, everywhere we go, they get so much attention. So it really, really is great. Todd Gordon, here we are halfway through 2023. The NASDAQ off to the best start in history.
Yeah.
I was promised a recession. I was promised, a financial crisis. I'm getting the best start to the NASDAQ in history. Tell me what's going on.
Dude, it's been awesome. It's been such a crazy market. The bearishness was just, I mean, the boat was so loaded on one side. I mean, the bearishness was rampant. It was just such a setup, man. Happy to say, we've been long. I was kind of doing some hedging a little bit, down towards the lows at the end of 22 and sort of got on the tech train. I'm loving the growth trade. I think people are starting to realize that they were offsides. I think positioning continues to be offsides. It seems to be everyone's kind of coming around to the idea that we need to be long tech. Growth is just rotating in. I'm doing a lot of work on relative rotation, and I kind of think it's funny. People are starting to say, let's all of a sudden, we can't be long because it's being led by a few growth stocks. That's it. I mean, if you look at the internals, and I know you guys are on top of it, you look at what's actually happening. I mean, this is now developing into a widespread rally. People are starting to realize that they missed the boat. And I think we're starting to see a little bit of a pullback here. But what happens when everyone who's offsides jumps into this market?
Yeah, I think
we're seeing still heavy cash positions, little exposure, leads me to believe that the unwind that we've seen, could potentially just be getting going.
Right. In this chart right here, it's funny. People say growth is don't trust this rally because growth's leading, large cap growth. Look at that chart. This is like 10 years return growth is up 12% compared to mid cap growth 168. And you look at all the values down up 80, 87, 65. Like, dude, growth, large cap growth has been leading for like half of our career, boys.
So it's not just growth, Todd, but the other theme is large over small, right?
It's same thing. Like you could throw market capitalization of iShares up for sure. I mean, how often in the middle part of a bull market are you seeing small caps lead large cap? Right. And then you put it into this economy. Small caps they're smaller companies. They're going to be more inflation sensitive, interest rate sensitive. The other part is like, what do you guys think about this? Do you need every stock on the New York Stock Exchange, everything out there participating on the upside? Like, I don't. I want companies that are embracing, technology, companies that are making the investment in NVIDIA and AI to make their margins more efficient. Like, we don't need everything rallying.
Even in the strongest bull markets, you're going to find stocks that aren't participating, and in the strongest bear markets, you're going to find stocks that are doing well. Particularly as you go down the cap scale, it's fun. If you want to throw up the value growth and the 10-year.
Hold on, Todd. Talk to us about that relative rotation graph, quick.
So I love RRGs. I know you guys aren't doing much with it, are you?
No, I mean, I look at them. Some of the guys use them, but we're looking at so many relative trends that.
Yeah,
we do the work itself behind the scenes to understand the rotation versus using the relative rotation graph itself, right?
nice
We're friends with Julius. Like Julius is the man.
Yeah.
Strazza's going to go out to Amsterdam, hang out with Julius. And
It's
eat
a
some
lovely
Indonesian food.
visualization, though. Really, it paints it really nicely. I do like it.
Yeah, no, it's pretty awesome. I put some stats behind it. So what we're looking at that top left chart, people say growth is overdone. On the monthly RRG, and we're benchmarked against the S&P, the minute that the left one, which is growth, overtakes the right one, which is value, that's the point at which growth is overtaken. We haven't even done it yet. We have not even seen a full rotation into growth. And if you go back, and I have some stats, I did for our customers, the average rotation, if growth overtakes, I'll give you some stats. It happened 4 times, 03, 13, 16, and 2022. The average rotation, if growth does in fact overtake value, is 41.6 months.
Yeah.
We haven't even overtaken yet. We haven't even, so they say growth is overdone. Dude, we may not have seen anything yet. I hate to be perma bull. I'm not perma bull. Like, I just threw some option hedges on against resistance in the NASDAQ. But, dude, this thing could last 3-4 years. And then the other cool thing, when value is outperforming growth, I said the average outperformance of value, a growth to value is 41 months. When value is outperforming, it's only 24 months. So it's like, I mean, just again to say, we're too late in this growth rotation. One, not true. And if in fact we are rotating into growth, it could last a couple years.
And what does it mean for rates? Throw the one with the 10-year yield up there. What is that? What is this growth suggesting for the next move in rates?
Yeah, this is what. Do you have that? I did a value growth over a 10-year yield. I think this chart is awesome. This is what scares me. Yields, long-term yields.
I don't want you to be scared, Todd.
We did this one for Investopedia yesterday. We were kicking this chart.
When we were skiing in that cat that one time, I was a little scared.
Oh, that was child's play, bro. We got to get you out of a helicopter.
It was a little scary. Yeah.
So, Strazza, you guys did this. You were looking at the same thing yesterday?
Yeah, I love this. Talk to me.
Oh, isn't it awesome? Like this, like I'm pretty long. Like I'm so long I had to hedge against this resistance and some options. Yeah. If the long-term 10-year yield moves up, look at how, speaking of the rotation, 10-year yield is driving that value growth since 2022 with the inflation move up. So all of a sudden we've diverged. The 10-year yield is bumping up against 3.738. And the value growth ratio is selling off, which means growth is now outperforming value, right? But if the yields keep going up, if for some reason we get a 3.9 or a 4.0 handle on the 10-year, what is that going to do to the growth trade? I'm worried that, if they're selling bonds, why are they selling bonds? Because, I don't know, is the bond trade 60-40 portfolio dead? Are people just sick of fixed income? Are we pricing inflation? I don't know. And that's the one thing that could derail this growth trade right now.
But what if the 10-year yield just keeps doing nothing like it's been doing, and stocks love it when yields do nothing?
I hope it does nothing. I hope this correlation breaks apart. And I think that's possible. I hope we just kind of languish between, the minute you start seeing 3.6, 3.5 in the 10-year, you're going to see growth move up. It's like, it's day by day. The correlation is crazy. And I hope yields just go sideways and this falls apart.
I love where your head's at. We're asking a lot of the same questions. I don't have a good answer, but I want to throw 2 things out.
Please.
One, these stock market, the intermarket ratios that we use, at least the equity market ones, whether it's regional banks relative, utilities relative, even copper, gold, right? So the commodities market, they've all missed the bond market for a year or 2 now.
Yeah.
They've been diverging from rates in a way that we haven't seen in a long time. So do we really want to start taking them too seriously or weigh the data too much at this point? I don't know. The other thinking.
I've been watching the copper gold as well. Like there's a massive divergence between yields and copper gold. Like for China's sake, like China's the biggest demander of copper. For my case, which I'm bullish, I'd love to see China jump on board and skirt a recession, start buying copper, and that ratio will close up.
Yeah, right.
Sorry to interrupt.
And then the other thing I would think about specifically for the divergence between bonds and tech, right? Because bonds have been weak this year. Tech keeps cruising, kind of like it's pricing in lower rates, but we're not getting lower rates. Could this just be the AI thing? The secular tailwind is so much stronger than any of these cyclical forces. And maybe that's what's being priced into these long duration assets, but not bonds, because they're obviously not affected.
Well, I mean, if we are going into AI, I mean, if we are, I do believe, and again, I don't ever want to be labeled a perma bull. Like, I run an RAA, I run money. I could go to cash in 30 minutes and be short. And when there's times to, like, I am not mandated long only, like I am not perma bull. But if in fact we are going into the next digital generation, the first one was in the late 90s when JC and I were trading on AOL dial-up. Strazza, I don't know if you were quite there yet. This is the second generation. To take a page out of Kathy Wood's book, which I've been saying this even before she, got her huge moment in the sun. Technology is inherently deflationary, which should be good for the bond market. Disinflationary, deflationary. We should start to see, a bottom in bonds and start to move up unless people are scared of the 60-40 portfolio, unless people are going to be moving it. I don't know. I don't know what's wrong with the bond market.
You make a good point. It's basically like, if AI is really the thing everybody's saying it's going to be, it will have a deflationary impact.
Yep.
And kind of keep a cap on rates, just like the internet did.
Yeah. No, it's awesome right now. And again, I think, so we're talking about the long end with the 10-year and 30-year, right? I was kicking around. I was trying to get Optima to update. I'm tracking some custom stuff with the yield curve, nominal versus real yield curve. And if you look at expected inflation into the 10-year expected inflation into 10-year nominal, subtract that from 2-year expected inflation into 2-year nominal. So you look at the real yield curve. The nominal is inverting again. Right. And so what's happening is we need those longer end yields on the nominal to push up, which would normalize the yield curve. So the one good thing, if they do sell bonds, maybe that's going to normalize the yield curve and get it out of this massive inversion. But on the other end, if you look at the real yield curve, the inversion is nowhere near where it is on the nominal side. You've got to be talking about where expected inflation is going. And everyone's saying recession's coming because of that inverted yield curve. You look at the real yield curve and the prior inversions that foretold recession, we didn't have this difference between the real and the nominal.
Let's stick with that, because I want to talk about gold before we let you run. Gold continues to push up against these highs. First of all, throw up the gold chart. There we go. And to me, I'm looking at real yields. You just mentioned that.
Yep.
Throw up the 10-year real yields overlaid with gold futures inverted, so that you can see gold essentially pushing up against new all-time highs, but the real yields are just now starting to come off.
Yeah.
Is this the catalyst to get gold going again?
I've been kind of bearish on gold, and I'm saying don't buy it through.
Walk through the chart here. Walk through the chart, because there's a lot going on.
Yeah, there's a lot going on. So blue is gold, but flipped upside down. So that's on the left scale, pushing 1900, 2000 on the left scale. And these are the real yields, right? So you take the 10-year expected inflation and then subtract that from 10-year nominal. And if you think about it, falling real yield environment, that's the environment that you'd want to buy gold, which is it's a heavy rock. There's no yield to it. There's no earnings behind it. If your real earnings power is going down, that's the time to buy gold. And this correlation has clearly been the case. Real yields were spiking, and I thought gold would be down 1,1600, and it really didn't go anywhere. So now that you just said, JC, now real yields are dropping. This may be the catalyst for gold to go.
Is there a price that you're looking at in gold for confirmation?
Is it too convenient just to say 2K? I'm not following it that closely.
It's not that clean, but it's about that. It's not as clean as something like that, but it's about that. And you've looked at currencies very closely for a long time. And when you look at gold pricing those other currencies, gold's been making all-time highs, pricing euro and pounds and yen and CAD and Aussie and Kiwi and Rupee.
Because the dollar's been strong.
Right.
And what's
but ultimately, doesn't that say, well, the gold and dollars should ultimately break out as well?
Well, the relationship I'm looking at is, if gold is going to move higher, those are the same conditions in which growth stocks should rally. which is weird. If you want growth to go, you need gold to go, because what gold right now, I think, is an anti-dollar play. You just said it's making new highs versus foreign exchange. It's not versus dollars because it's an anti-dollar trade. Higher yields go, the higher the dollar is, the more the interest rate differential is overseas, stronger the dollar. And generally, that's going to be pressuring growth, right? Because higher interest rates are challenging valuations of growth. So you want lower long-term yields, lower dollar, which will put growth back on the forefront. Those are the same conditions in which gold rallies. So it's weird. You actually, I think in this environment, you want gold to go above 2K, and everything else from an intermarket perspective is going to push growth higher.
Yeah, lower dollar, lower real yields. And then finally, you got some fans out there asking for the Elliott wave, Todd, asking for the Elliott wave. You got to give the people what they want. I know Spencer's going to bring in Kimmy now. Quickly, 1 minute. Why don't you take a look at the NASDAQ 100 cash?
I'm so
a lot of letters, a lot of numbers. What's going on? Quickly.
It's a blessing and a curse, man. I'm so tired of explaining it, defending it, but I just can't be without it.
They're asking for it, Todd. You got to give the people what they want.
All right, I'm a people pleaser. So the correction, from late 21 down to 22, it was just a big wave 4 correction. Everyone's trying to say this is the end of the world, and I'm saying, dude, the price structure is so easily there. I really wasn't bearish ever. We've got a very, very nice wave 3 move up. I know you guys like FIB. It's interesting. Right now, we're at the 786 retracement of the 21 high down to the December 2022 low. The 786 is what we call the retracement of last resort. If a lot of times there's sort of stop run pushes through the 618 retracement that end at 786. If you break 786, and this is geeky stuff, but if you take your calculator, you do 0.618 square root, that's 0.786. So the 78% retracement broken yields 1272 extension. 1272 is the square root of 1.618. So the square roots of FIB works very well. So we failed up here. I put a July butterfly on to hedge because I think we're getting a little wave 4 pullback into the last 2 weeks of July because we've got a lot coming up. It's earnings season, CPI, Fed at the end of July. So I think, this is the kind of time when there's low data, there's not a lot going on. They tend to rotate into value, get out of growth. So it might be a little wave 4 pullback. Once that's done, I think we break 786, completes 1, and then we'll see a real yield, a real wave 3 that takes us up to the 1272 in early 24.
I love a good wave 3. I mean, listen, I'm not Mr. Elliottician over here, far from it, but I know I love a good wave 3 as long as I'm in the right direction.
Especially when everyone's like, all the investment banks for around the world are like, oh, whoops, our 3,500 target in the S&P is not doing too well. We better revise our target.
That's right.
All right, Todd Gordon, New Age Wealth Advisor, CNBC contributor. Todd, always a pleasure, man. Have a good one.
Guys, thanks for having me. Loved it.
All right. Hey, it's not. Oh, we're running behind. Oh, gosh. Why are we always running behind on this show? Let's get Kimmy Sokoloff on right now. See what she's watching.
Kimmy.
Morning, guys.
What are we looking at? I'm looking
at Merck. I mentioned it in the room yesterday. It's starting to peak up. I said you could, it's kind of stopped at this 113.70 area. So yesterday it started to get moving around like 113.20. I mentioned it in the room, said anyone had an interest that it moves towards where has potential to move towards 113.70, 113.80. You could take it up to a certain level, which is the moving average, the 50-day at that 113.80 level, and take a profit there, and then you could see if it pushes through. So I didn't take the trade yesterday, but I did watch it. I did alert the room, and then I'm going to see how it acts today. It could completely fail at this level, which it has recently, but we'll see.
Kimmy Sokoloff, 4 for 5 yesterday, making money in the snow, Apple, Nike, Adobe, 1 loss on the Wells Fargo.
Yeah, that was
nice
like last week. It looked like it was going to push through and it flopped. I was giving it time. People have to, decide on their own risk management, right? Meaning they could have stopped out if it broke below 43. Below 42.50. Sometimes I'll give a name a little wiggle room to see if it goes, and just sometimes it doesn't.
All right,
Kimmy-
let's talk NVIDIA. We saw new all-time highs out of Apple yesterday, which was interesting. NVIDIA continues to be on your radar. Still
just-
fading this or going with the trend?
Talk to us about any crypto stocks. It's Crypto
Hold
Friday.
on, let it mention NVIDIA, then we'll get to crypto.
Oh, NVIDIA. Yeah, I'm going to watch this one today for a potential short. I'm going to see how it handles below like 125 or so, and then see if it moves back down to yesterday's low. We'll see. I mean, listen, people love this name. It's a tough one to short. Shorts are always smaller than my longs, but today we're gapping down a lot. So I don't know if it's a gap and go lower, a gap and crap, or just a gap and bounce, right? So I don't even know why we're down. Do we know why we're down? We're just down all week, which is fine.
When you're looking at like your pre-market watch list, and checking out the movement before the bell, how much are you paying attention to like futures and news?
Oh, yes, I look at all that. My first thing I look at in the morning, the futures, the SPYs, the Qs, the IWMs. IWMs was starting to get hit yesterday. So I am watching it as well, see how it handles this like 180.75 level, potentially for a bounce. Otherwise, boom, otherwise it could head right down to IWM, down to the gap at 176.24.
Yeah.
Any crypto stocks on your radar?
No, I traded them earlier in the week.
Coinbase.
Yeah, I'm gonna leave them alone. Maybe this MSTR still looks really good, but it has huge wiggle, it moves a lot. Look at the movement yesterday. 313 low, high 337. You got to be able to take the movement in it intraday. It's like, some of these names have big movement. So, if it claws its way back above like 325, maybe it pushes through, maybe it heads to all-time high at 347, Do you like crypto?
Well, today's Crypto Friday, so I am personally long Bitcoin. We've got some options positions in some of the crypto miners. I was with some crypto friends last night, debating and whatnot,
Mm-hmm.
So it's top of mind, we could say, right? Top of mind.
How what about so he likes the gentleman before, he likes gold. It looks like it might be a nice.
He likes
bounce
gold
up
if the dollar starts to roll over, if real yields start to roll over, he likes gold. And I mean, I like gold in those environments too.
Someone's saying fellow Brown Brothers Harriman alum. Wavy,
Wow.
I don't know who he has a hi.
Wavy McFly saying hi from Brown Brothers Harriman.
McFly, who I don't know his full name, he could hit me up, email me. He's like, oh shit, Kimmy.
How long ago did you work there, Kimmy?
What?
How long ago did you work at Brown
I worked
Brothers?
on the trading desk at Brown Brothers Harriman. I never forget. I was with the traders, and I was literally at that time on the train. I was like the only non-Ivy Leaguer there.
Where'd you go to school? You went to Delaware?
University of Delaware.
What are they? Delaware Roosters? What is the name of their?
Blue Hens.
Blue Hens. What did I say? Roosters? That was pretty close.
Yeah, the rooster. I know the mud. My friends used to say it's the mud chickens. Hey, it was a great school. I had a great time. Oh my God.
I hear
so
good things.
funny.
I hear good things. Here's the fun, police.
That's really funny. No, I'm just trying to make
Yeah, I know.
sure
I gotta get
Kimmy's
to my
not
room.
late, man. All right, Kimmy has to go to her room, to be with her people and trade. She's there every single day. There's a link. It's in the description. It's in the chat. It's on the screen. Roosters was funny. Kimmy, thanks a lot.
Thanks, Kimmy. Go get them.
Who is that? Okay. Bye, guys.
All right, this is gonna eat her alive all day now. Anyway, I'll put the link in the chat once again. It's the link to Kimmy's room. She's there every single day at the open and talking her trades and giving trade ideas and just
4 for 5 yesterday.
Being a resource.
She's crushing it, dude.
Being a resource. PJ calls it the schedule police. Maybe. Well, today, actually, more so than any other day, because I actually have to leave the show in a couple minutes here. I have a flight to catch. I'm going to Minnesota for the weekend. So I'm going to leave you guys in the capable hands of Giancarlo for the next half hour or so while I'm gone. And then Monday as well. Well, Monday will be Izzy. But
Giancarlo was having a good time last night on the Lower East Side. I'll tell you that.
Yeah, I bet he was. All right. We're going to have Ian Cully, I think, join us in a couple of minutes here. You want to do Hot Corner real fast?
Let's hit it.
I said that, but then I wasn't there. Now I'm prepared.
So hot right now.
All right. Anything stand out there, Strazza?
Yeah. You want to talk about shippers? I know you love shippers.
I don't not love shippers. I mean,
And JC's family's in the transportation business. So it's a family
logistics.
Logistics is a part of transportation, my friend.
Fair.
So Eagle Bulk Shipping, EGLE, big buy from Danos Corp. That's ticker symbol DAC, right? Danos is, I think, about like $1.3 billion shipping company, container company. And Eagle is smaller. It's a small cap. I'm seeing about 650 million. Regardless, what's going on here is really interesting. Over just the past few months now, Danos, and I'm not saying it right. I doubt I'm saying it right. But DAC has acquired over 10% now of Eagle Bulk Shipping outstanding stock. Eagle Bulk does not want to kind of be the victim of a hostile takeover here, and they want to stay independent. They bought back a massive amount of stock recently, hundreds of millions worth, I think. It was over 200 million worth. It doesn't even sound right. From Oak Tree Capital. So they're trying to kind of boost their own stake to kind of fend off any sort of hostile takeover from their competitor, Danos. And they also just adopted a poison pill policy by the board. So that makes it really, really difficult through, some vague shareholder rights for an acquirer. So we'll see. But that's what's going on here. And I would imagine Eagle should see a nice, bid in their stock from this today.
It's up 2.5%. These shippers are just really small. So the fact that it's under $1 billion is more of a function of, it's more of a feature, not a bug for these kinds of stocks. So just kind of keep that in mind. Just understand the beast. They're not very big. They're not very liquid. The options market is non-existent in a lot of these things. When the shippers were having like their greatest moment ever, they were playing zero role in any impact in the major indexes because they're just not big enough to make a dent. So just kind of keep in mind what these things are. And this is really interesting. Explain to the kids what a poison pill is.
I don't even know exactly how it works, but I think they're temporary shareholder rights. It's a defense tactic that listed companies use to defer activist investors or acquirers from acquiring.
Because if they purchase it, it dilutes the shares, right? Like that's what the poison pill does.
They make it so that it basically doesn't make sense to try to take the company over.
Right.
I think so. Yes.
Do either of you remember like 2 years?
Do it, I think too, JC.
A few years ago, when the shipping rates went through the roof, CNBC had this CEO of one of the shippers on the show, and he had a very thick accent, and he was talking about how much money they were making, and he just said like, "We're taking it in." I don't know. It was an all-time classic moment on CNBC, just with this funny CEO who they're making so much money, and then obviously time to change.
I love how they delisted the shippers ETF right before all the shippers went nuts.
Yeah,
like it's just
yeah.
like classic.
Nordic American Tankers guy, NAT.
Possibly.
He's really funny when he does media.
Yeah. Okay, guys, I gotta go. I'm gonna leave you in the hands of Giancarlo. I'll catch you guys next week. All right.
All right, Spencer. Take care.
Right. Oh, and there's the opening bell. Look at that.
And they're off.
So, JC, you're right. Companies promise to distribute additional free or heavily discounted shares to all existing shareholders. So it blocks the accumulation. Purpose is to dilute the shares so that outsiders cannot gain control simply by purchasing a controlling amount of shares.
So this is 7.6 million. What about this biotech, Vera Therapeutics, VERA?
It's been a lot more than that. They just acquired more than 10% of the outstanding shares. So
This is just under $1 billion. This thing doesn't even trade. This thing doesn't even trade at all. Can't touch this thing. Never mind.
Can we throw up the table?
Yeah, throw up the table just so you could see it. It's a hefty amount, but I mean, there's no volume in this thing. This thing doesn't trade at all.
Hey, Brown Brothers Harriman.
Five. Yeah. Speaking of which, it trades 500,000 shares a day. It's not nothing, but be careful with this one.
Sean, I hope Sean's watching right now. Sean always makes the point that like DraftKings is just constantly seeing bullish options activity. It was on our list again yesterday, Sean. So we'll be talking about it next week. Again.
Just continued every single day, huh?
Well, every week for like the past month now. And Sean made a good point. He's like, I feel like this happens every summer.
Because Sean's got this conspiracy theory, like an American, that
It's like baseball.
He thinks it's football. Football season's coming, so people are buying DraftKings. It's like, I'm pretty sure people don't think that way. I'm pretty sure that's just Sean.
I'm getting a DraftKings account. Now that I'm a shareholder, I'm going to get an account. I'm going to have some skin in the game.
What states do you need to live in to have a DraftKings account?
I don't know, but I'll use my parents' address if I have to.
Wavy McFly talking about markets are puking at the open. Puking. I see S&P's down 90 bips. I think puking's a little dramatic. A little dramatic.
He's talking about small caps.
Small caps are down. Small caps are down quite a bit. I'm looking at those regionals again. Throw up that chart of the regionals and the community banks one more time. Fonz. That's front and center to me. If you're looking for failed breakouts in some of these areas that have been moving, you probably want to look at these as the culprits, right? Every market, every downtrend, every bear market has its culprits. Financials, regional banks have certainly been that as of late. So if you're looking at these as a leading indicator, this is what I would watch. Sure.
Let's get a chart of DAC, Fonz, because we could buy this stock, JC. And it's not. Sorry, we could talk about banks. But I just
no. It's fine. It's fine. Talk to me about the DAC. Why are we interested in Danos Corporation?
It's not usual that the acquiring company or the company that looks like they're trying to be the acquirer rallies. Typically, you would see like a sell-off on like a proposed kind of like merger or proposed type of buyout. But DAC is like just resolving higher from this base. Totally resilient through all this news. And I think the news really just broke last week because they stayed under that 9.9%. We didn't get filings for a while on this. See that all the time. But now that the news is out that they're probably potentially looking to try and take over Eagle, stock still looks great. And 1.3 billion. I think this one's totally buyable. I was reading about them a little bit this morning. They had a nice big investment in ZIM, another shipper. So like this is something that they do.
Throw up the chart there. It's slide 1 there on the DAC.
It's a nice base.
Listen, I don't think investors have enough exposure to Greek shipping companies. I believe most investors are underweight Greek shippers here. DAC certainly one of them, 1.3 billion. It doesn't look terrible. It's got work to do though. Are you going to go buy this right now?
No, it's not the best base. I guess it's more like I was just thinking to myself, if you have to buy a shipper, I'm kind of flipping through them all right now. This isn't your worst option.
No, it's not. Are we bringing Ian today? We're bringing in Ian today, correct?
Yeah, we're talking about nat gas. I can't wait.
No, good. I want to talk about natural gas. I want to talk about crude oil. Those things are moving. You want to go hit the hot corner, the chart report?
Yeah, we should.
Let's do it. Hit it.
Hold on. I know stock market, Mike. I'm very disappointed. I had the Hard Rock sports betting app like 2 years ago when they allowed it for a couple months, and then I don't know what happened, but they've been like tied up in the courts for like several years now about the sports betting thing. So there's the answer, JC. Not in Florida still, DraftKings.
All right. Well, we're moving on. This is the chart report. What I like about the chart report, I get it in the evening. Sometimes I check it out in the evening. Sometimes I check it out in the morning. And, Patrick does an excellent job of aggregating the best technical analysis being done by the best technicians in the world every single day. I don't have time to be sitting there scrolling on Twitter, seeing what's good, what's not. Few people do. Fortunately, Patrick goes ahead and does this for us and sends us a nice little email. And I want to scroll down here to Christian from Hertz. He's got a chart of the small caps versus the NASDAQ 100, IWM versus QQQ. You could zoom in on that. You got that bounce. We got long small caps last month. They really got moving, particularly on a relative basis. And now we're back down to those lows, right? So the question is, was that small cap outperformance? A couple questions. Was that small cap outperformance just a mean reversion, just a dead cat bounce? Was the small cap outperformance the beginning and this is just a retest? Or do we not need small caps to outperform like we saw in the back half of the 1990s, where small caps were underperforming that entire time? What do you guys think?
You know, it would be nice to see them perform better.
Nice for who?
It's not about whether or not they're going to outperform. They got to get it together on an absolute basis, though. Like today's action, not great. Past few days' action, not great for small caps, just on absolute terms. That's what's more important to me. I do think, like we've said on here before, whether it's this chart or IWM SPY or IWM IWB, which is the Russell 1000, any type of small cap ratio that you look at right now is testing, you know, these former lows from, what is it? It is 2020. Yeah, these former lows from like the first quarter of 2020. So it's a very logical level to see small caps start to assert some sort of leadership, but we got to see it. We're not seeing it.
Yeah. So I thought that was a good one. Kind of really tells the story of what's happening there. And then the Larry Thompson again. Shout out Larry Thompson.
Larry's bringing the heat.
Larry bringing the heat, talking about the regional banks, which we pointed out earlier. So clearly we're not the only ones watching it. And then finally, I just wanted to give a shout out. Steve Strazza making the top 10 on the chart report yesterday with your obnoxious trolling of breath being so bad in the S&P 500 that the advanced decline line is about to make new all-time highs. Right? What are your what were you insinuating there?
I think I'm funny.
Did you make yourself laugh there? You crack yourself up?
I mean, look, the advanced decline line is one of the simplest measures we have of breadth. And it making new all-time highs tells you it can't just be 5 stocks. I think that's like kind of the easiest way to debunk that point if that's kind of your goal. Other than that, I wouldn't weigh it too much. Right? What is the thing that we always used to say? You always get a new high in the advanced decline line before the index, but the index doesn't always make a new high following a new high in the advanced decline line.
Yep.
So yeah, we'll see. But it's not a bad thing, right?
You agree with my my thoughts there on the top charts of yesterday? Did I miss anything?
No, thanks for the shout out. I'm honored.
The quote of the day coming from Isaac Asimov. Am I supposed to know who that guy is? Should I feel bad that I don't know who Isaac Asimov is? He said, "There are no happy endings in history, only crisis points that pass." I thought that was interesting. You know, you hear all the time, "Oh, it's going to end badly." It's like, as opposed to what? Like, by definition, it's supposed to end badly, right? That's why it's the end. No?
I don't know. Not his best work.
Who is Isaac Asimov?
I don't know.
He's a sci-fi writer, Sam says. All right. I don't read sci-fi. My understanding is I should. Like last night, I was in conversations about sci-fi. Rarely are people talking to me about sci-fi. But last night, I felt like the weird one who doesn't read science fiction.
You were talking about like crypto sci-fi things, metaverse things?
I mean, they were talking, like before that, like sci-fi books from like the 60s and the 50s were already talking about like digital messaging, like email and text, you know, and so far out there. And what they were trying to explain to me, again, I felt like such a dummy. What they're trying to explain to me is like all these, you know, if you want to know what technology is going to do in the future, read old sci-fi books because they continue to come true.
There's a lot of
interesting.
Infinite Jest is another one that's just tremendous, and the things that he predicted in that book are crazy.
What is that?
Infinite Jest by David Foster Wallace.
Yeah. Should I be reading more science? I don't read any science fiction. I read books about like psychology and trading.
I mean, you could say the same things about a lot of classics that you've read, whether it's 1984 or Brave New World.
I've never read either one of those books. Who said I wrote that? Who read those?
Really? Oh, okay. I don't know.
What are they?
The dystopian or utopian books. George Orwell.
What are these books?
George Orwell. You didn't learn about this in like middle school?
No, I didn't start taking life seriously until after college.
All right, so forget it. You're not a book person. That's fine. We don't need you to be a book person. Listen to your audiobooks.
All right. I mean, you know, I got to step up my game. Honestly, I felt, you know, kind of ashamed a little bit ashamed. They're all talking and talking. I don't know what the hell these guys were talking about, and gals too, for that matter. All right, guys, This is the daily chart report. Patrick does an excellent job. If you could throw up, if you could drop the link on where people can subscribe, it gets to your inbox for free every single day. Patrick does an excellent job. We talk about it here every single day in the morning show because, you know, it's kind of like, you know, we were looking at it, I was like Howard Stern kind of reads the New York Post in the morning. You know, we kind of read the daily chart report. By the way, when I'm doing TV, when I go do Maria Bartiromo's show, her morning show, she's got the New York Post on the desk. You know, she's got a few other newspapers as well. But I mean, only in New York do you get on there on the desk to go on TV and they have the New York Post there. Come on.
You got to stay up on your news. These people, they're on TV talking about the news. They got to stay informed. What do you want them to do?
Well, I stay informed by reading the chart report. It gives me a quick summary. I was busy yesterday. I wasn't sitting there scrolling, doom scrolling. That's what the kids are calling it these days. Doom scrolling. Yeah. I don't have time for any doom scrolling, right? So that's the chart report does a really nice job for that. So set up for the chart report, and I believe now we are bringing in our main man, head of fixed income, commodities, and currencies at All-Star Charts, Mr. Ian Colley. Come on down.
New York Post is a tabloid. Oh, that's funny. I'm going to go heat up my coffee. You guys start.
All right. Hit it. Wow. Look
hey.
No bumper today?
No bumper today. Good morning, guys.
2 seconds and you get no bumper. Giancarlo, step your game up, buddy. Step your game up.
It's Friday. Hey, Todd Gordon bringing the goods today.
I thought so. You know, those real yields charts really get you going on a Friday morning, don't they? There, Ian?
I tell you, I got to start looking at that curve. I only look at the nominal yield curve. I don't look at the real yield curve. So I'm gonna add that to the deck.
Can we talk about crude oil, guys? Can you throw up the crude oil chart there? I think that's probably a good place to start. I know Strazza is anxious to hear your thoughts on natural gas. I am as well. But this crude oil thing down to 68, you know, just really not doing what it needs to do. Guys, can you throw up the crude oil chart there, please? You know, you're looking at the 2018 highs. Are they going to be able to stick this landing? I mean, they continue to try to knock this down. They try to knock this down. They try to knock this down, and they can't. So is it one of those things, Ian, where the more times they try, eventually they're going to knock these things down? Or is their inability to finally kind of put that final nail in the coffin, suggesting that we're going to get that rotation? I feel like the weight of the evidence has in fact suggested rotation. We haven't seen it yet. So I want to hear your thoughts.
Yeah, I lean towards the latter. You know, I'm definitely not an energy bear, and I like crude oil futures as long as they're above 65. I draw a line a little lower to those 2019 highs. Do you see the Shelfa highs?
Why 65? You're looking at sort of like the March lows.
Yeah. So, you know, as long as it's above 65, I got to give energy and I got to give crude oil the benefit of the doubt. I mean, gasoline futures are hanging in there.
Right. Gasoline and RBOB both hanging in there. Okay. So you're using that as sort of like a heads up, like an indicator.
Absolutely. Because I want to see the derivatives, continue to catch a bid, or at least hold up, at least remain resilient. You know, if they start to roll over, then I expect crude to follow. But as long as they're hanging tough, and as long as crude oil again is above 65, I mean, I don't think there's anything to talk about, at least, you know, in terms of downside risks.
What about natural gas? Do we have the natural gas chart up? Can we throw that up there?
Yeah, I brought a bunch of natural gas charts. I brought a little seasonality chart, some positioning. We've been talking about natty gas for months now, and you know our risk was really well defined earlier in the year. Yep. We took a swing. You know, we got stopped out. But in the meantime,
we took a swing and missed.
We took a swing and missed. But hey, you know, we got stopped out. But in the meantime, it's had, you know, it's carved out a nice little base. You see in positioning start to unwind. I'm talking about commercials.
What does the commercial positioning look like right now?
That's on 48. So I have 48. Potential unwind underway there. You know, we see going back. It's the next slide. back in 2019.
So walk through the different lines down at the bottom. Which one's the hedgers and which is the specs?
The hedgers is the red line. That's the smart money. We're
gonna need better labeling here. What do you think, Strazza? Are we being annoying, or do we need better labeling here?
Yeah, I don't know what's going on here.
Yeah, come on, Ian.
You need better labeling? Okay, I'll start labeling it.
We need better labeling. Take that pick, take that comb pick out of your hair for 2 seconds. Put on some damn labels.
Hey, I got good water pressure over here. I don't know what to say.
All right, so the red is the commercial hedgers, right, which continue to pick up.
Yeah, well, they're starting to unwind their long position. I mean, they were net long for the first time in 3 years, which I think is a big deal. And you can see highlighted in the yellow. I highlighted in the yellow there to mark when we had similar positioning conditions, and when we tend to notice a strong rally in price as those hedgers begin to unwind those longs.
It's pretty interesting
for the fires
in this particular market. Commercial hedgers are almost always short. The question is, how short are they?
Right.
Is sort of they're actually hedging, like they're commercial hedgers that are hedging. So the fact that they were net long, which rarely happens, is a heads up that perhaps we could be turning. And when you look at this base over the last few months, going back to what, March, April, you take a look at this base, we gave it a shot. It didn't work. But rather than just completely collapse, it's continued to base, giving us a new entry going forward. What are you looking at from a specific level to get long natural gas? And what do you think the best vehicle is?
You can use UNG. I also like just looking at the natty gas futures, and the level is around 270. So I really want to see the futures get above 270.
Those are the May highs.
Right. So if and when the natty gas futures get above that level, then I'm going to turn to UNG and look for taking a position. But I want to see the underlying commodity make that move first. And I
can see how many investors might want to choose the ETF because they don't trade futures. But a guy like yourself that trades futures, why are you saying UNG?
Was that why do I want to see the underlying make the move first?
No. I understand the underlying above 270, but for a lot of investors who might not trade futures, they could trade the UNG. But you specifically who do trade futures, why are you looking at UNG and not the futures?
I just think because there's a lot of volatility in trading natty gas, right? And there's certain futures contracts that I tend to steer away from. And I do dabble in the natty gas futures, but I think UNG is just a better vehicle, in terms of managing risk. That's
interesting perspective.
Yeah, right. I mean, I'd rather.
Sounds like you had a bad experience with natural gas futures one time.
I don't know any futures traders that haven't had a bad experience with natty gas. Right?
Touche.
We can throw lumber in there too. I think you know lumber.
Yeah, I'm 0 for a career trading lumber futures, by the way. I've never put on a successful lumber future. I remember walking through Times Square getting stopped out of my lumber futures trade 12 years ago or something like that. I think that was the last time I traded lumber futures. I mean, it's just not for me. The market has told me, JC, enough already with your lumber futures trading. Enough.
Ian,
okay, I listen.
Ian, what do you think about Mr. Todd Gordon's comments about gold and the intermarket landscape for gold?
I think he's spot on, and I agree 100%. I keep it, I got a much more simple approach in that my level is 1924. As long as gold futures are trading above 1924, I like it long. But in terms of the intermarket landscape, seeing real yields, turnover, seeing the dollar roll over, I think all those things, I think they need to happen. It's a need, not a want, to see gold break above 2,000, 2089, and start ripping towards new all-time highs, that 2,500.
Maybe
Target.
Moving in that direction past few weeks. I mean, dollar is up today with gold, interestingly enough.
Yeah, gold pulled back. It's pulling back the past couple of days. Retested those former 2011 highs at 1924 level I was talking about, and has found support and is catching higher today. So, I mean, that's a really big level. If it gets really messy below those former 2011 highs. So, bulls are stepping in and they're supporting higher prices exactly where and when they need to. So keeping an eye on that.
How about question from the chat? Any nat gas equity plays? I mean, I know we have favored Cheniere over the years. I'm a long-term bull. I own shares of Cheniere.
Yeah, LNG.
Yeah. Any others that come to mind?
I mean, you could trade FCG. You can just trade that ETF. And what's interesting, I brought a chart of FCG overlaid with natty gas futures. I think it's chart 49. And you can see that the FCG has been holding up. It's a lot like, overlaying XLE with crude oil futures. We've seen this strength or resilience from the equity space while the underlying commodities have been selling off. So I think this kind of speaks to, just broad demand for energy.
Here's the problem. There are way too many holdings in this FCG, and the majority of them are mostly traditional oil and gas companies. They're explorers and producers. Sure, I'm sure they all have some sort of exposure to nat gas, but
yeah,
these aren't nat gas pure plays by any means.
Is there such a thing? What's the purest natural gas play other than the ETF or the commodity? But in terms of companies,
LNG, you know that.
LNG is pretty good. Yeah, we like Cheniere.
Is it? But aren't they more like transportation? They're pure natural gas? I don't think so.
Pure play. So then you're saying specifically pure play, not on the industry, then, because they're a pure play on the industry. But you're saying on the commodity price itself.
It doesn't exist, right? You just got to buy the commodity.
Yeah, you got to buy UNG. Yeah.
All right. I got a good recess today. You want to hang around, Ian?
Yeah, absolutely. I love to.
Maybe Southwest Energy.
Hit it, Giancarlo. All right, I am very excited today. It's Crypto Friday, of course, but I got a shipment from Calistoga, California, and this is the 2021 Chateau Fibonacci Single Vineyard Cabernet Sauvignon from Calistoga. It's been in barrel now for about 17 months, 18 months almost. So I am going to, it came yesterday. I was in the city doing city things. So I just got it this morning. You guys saw how excited I was. So this is the 2021 vintage. And then wait, there's more. I got to cover some of these notes here, but this is the 2022 Cabernet Sauvignon from the same vineyard, which I'm going to try for the first time. I probably shouldn't be drinking wine at 10 o'clock in the morning, so maybe I'll wait till this afternoon. But yeah, I got the 21, so I'm going to decide if we're going to pull it. It's been in barrel. I was going to put it in barrel 24, 30 months. It's only been 17, 18, and it's tasting so good. So good. I'm definitely going to pull it unless – oh, man, it smells great. So I can't wait to dive into this tonight. But yeah, I'm going to try the 22 for the first time, and I'm going to try the 21, see we're going to pull it. Very exciting, guys. This is
exciting.
We're already on our third vintage. Right, the 2023 vintage is the third vintage, and we haven't bottled anything yet. So people are like, "Whoa, when's the wine coming out, JC?" I'm like, "Well, good things take time, and it just so happens that the Cabernet that we're making is the wine that takes the longest to make." Yeah. So good things take time.
Which vintage were you trying when we were out there last year? That was 2020.
We were trying when we were out there last year. We were trying the 21 vintage. We hadn't even harvested the 22s yet.
No, I thought.
Oh, we had just harvested the 22s. I'm sorry. Go through slide 1 so people can see what it looks like. This was when we harvested the 21 vintage, almost 2 years ago. This was some of it anyway. We had 4.6 tons of Cabernet Sauvignon, and because it's so many that they start bursting, the ones at the bottom. So like in the air, it's just like it smells like it's an overwhelming odor of sugar in the air, like just candy. It's crazy, like almost like too much. Not almost too much. It is too much. Like you start to get a headache because there's just so much sugar in the air. It's crazy. It's wild. It's wild.
Is it 100% cab? Are you blending it?
No, the 21 is a 100% Cabernet Sauvignon, single vineyard in Calistoga. It's in a little bit of, it's kind of like a peninsula because Calistoga is on the northern end of Napa Valley. The eastern border of our vineyard, it borders the Napa River. And then there's a little creek that goes around the other side. So it almost turns into like a peninsula. So the combination of volcanic and alluvial soils, because of the rivers, really just creates, some of the most unique Cabernet Sauvignon on the planet. I put my juice up against anybody, including the left bank of Bordeaux, is the only place in the world that can compete with our fruit, in my opinion.
I used to hit up the Indian hot springs there in Calistoga, or at the end of the road.
Oh yeah, see, you know. So our vineyard is right around the corner from there. Pretty cool. So we're on our third vintage. I'm going to start to do, now that we're going to potentially start to bottle our stuff either this summer or maybe at the beginning of next year, depending how this evening's tasting goes. A lot of pressure on me to make this decision. A lot of pressure. Someone's got to do it, though. Listen, I have access. I lived in Sonoma for 5 years. So I have a lot of friends in Napa, a lot of friends in Sonoma. I have access to some really good Cabernet. I want to do a Super Tuscan blend. I love Super Tuscans from Italy. And I could do a nice blend. Cabernet Sauvignon, Sangiovese, 61.8% Cab, 38.2% Sangiovese for like a Super Tuscan blend. Like that's definitely what I want to do. Probably not going to do it this year. Looks like a 24 project.
That's exciting.
That's my recess. That's what I got.
That's exciting.
It's exciting, today before the morning show, opening up the box with my juice,
So you guys see the did you guys see the trailer for this new movie that Spencer shared?
No.
Is it real? Is it a real movie?
Yeah, Seth
What
Rogen.
movie?
I thought it was a joke.
What's the movie about?
Can we throw up an image of it? Fonz. So it is a group of ragtag amateur investors from the Reddit page Wall Street Bets band together in a David vs. Goliath GameStop short squeeze that crushes one of the biggest hedge funds on Wall Street and upends the establishment. You guys got to go watch this thing, and then we'll talk about it Monday.
Have you seen it?
No, you got to go watch the trailer. I don't think it comes out until September.
Didn't we live it?
Dude,
Seth know what happened.
Rogen plays.
I was there. I'll tell you what happened.
Seth Rogen plays Gabe Plotkin. Some guy plays Steve Cohen. I dropped that picture in there. Who's the guy's name? He was in The Girl Next Door. Paul Dano, I think. Plays, what's his name? Something Kitty. Roaring Kitty, right? Roaring Kitty. Pete Davidson's in it. So,
really? It's a great cast. So it's a comedy.
I don't
obviously.
I think it's probably a comedy the same way like that Kramer movie with Clooney was kind of a dark comedy.
There was a Kramer movie with Clooney?
Yeah.
Where have I been?
I didn't see it either.
You want to hear something funny about that period, Strazza? My father-in-law is a big Mets fan. And so he comes over to my house while all that stuff was going on. He's a big Mets fan. And he goes, JC. And he's not into the stock market, obviously. Far from it. JC, what the hell is going on with GameStop? And why is it affecting the Mets?
Dude, the Kramer...
Because Cohen had already bought the team by then.
Yes, I get it. The Kramer Clooney movie is called Money Monster. Came out in 2016.
Is it good?
No, but
it's not good.
It's literally about him. Like it was a hit piece. Yeah, it's really interesting. You should watch it.
All right.
Can't believe
you.
Right.
Ian, what do you got?
You know what? My brother was celebrating his birthday. My baby brother's having a birthday party this weekend. And a few weeks ago, he told me he was renting out a bounce house, like warehouse. It's been in the news, right? Like, all the adults having these bounce house parties.
Yes, I've seen that. Adult bounce houses.
We already
know, right?
Here.
Sounds dangerous.
Well, I was really excited. Turns out it got overbooked. So
you were going to go
it at my mom's house. But anyway.
You were going to do adult bounce housing?
Oh, yeah, I was excited. I thought it was going to happen. So
I'm over here hoping and waiting to get invited to an adult bounce house party. And you got invited to one and didn't go? Or
no, it got canceled. We got overbooked. I was excited.
Yeah, right there with I don't think I'm going to do that. Like I could just see me ramming my head. I watch these kids in bounce houses, and I don't know how they're not killing themselves. There's no chance I'm going to get in an adult bounce house. No.
No, you're too big. I don't want to be out there with you anyway. You're too tall. Like it would be a hazard.
And I'm clumsy. Like, yeah, I'm a hazard. Yes. I'm just not good for society in an adult bounce house. I'll watch, and I'll make fun of you guys for hitting your heads against each other like a bunch of idiots.
All right.
That's what I wanted to do.
That's exciting for me over here.
All right, close it up, Giancarlo. Everybody, thank you for being here. This was the morning show without Spencer in the last third, and we didn't completely screw it up. Ian Colley, thanks for showing up, my man. I said it the other day, kind of looking a little like Bluey, with those glasses. Maybe not the hair. Maybe you should dress for Halloween like Bluey.
They help me see.
They help you see. They help you see. I'm JC Parets. This is Steve Strazza. Shout out to Spencer Israel, Kimmy Sokoloff in the house, Todd Gordon. Thank you for coming, everybody. Happy Crypto Fridays, and have a great weekend. Adios.
See you guys.
Run it. I can't take no loss. I don't even know what it costs.